Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for December 9th, 2018. Hope you guys and gals are having a great weekend. As we wrap up the year, there's going to be some volatility over the next couple of weeks, and I think we need to talk about some of the technicals that are surrounding the markets, especially going into this next week, which is such a big week with the ECB meeting and also the Brexit vote that is likely going to happen on Tuesday. But before I do that, I need to mention, if you haven't tried out ForexAnalytix yet, make sure you do so. It's only $1 for 10 days. All you got to do is click the sign up button right here. Click the sign up button and then download the mobile app or the tablet app as well. If you have an iPad or some sort of Android tablet, you can get these apps in the App Store or the Google Play Store. Make sure you do that so you have all of our analysis right at your fingertips anywhere you're going. Okay, now let's talk a little bit about next week. So first of all, next week we have on Monday we have the UK GDP, but more importantly, and probably the most important event of the week is going to be the UK Brexit Parliament vote. And that's going to be on Tuesday, and the cable is obviously going to be watched very carefully. We closed our week near our lows, not too far off our lows. You can see this triangle support that's coming into play, and that's obviously very important. Now, I'm going to talk a little bit more technically about the cable here in a second. I just want to also reiterate, alongside the Brexit vote, we do have UK jobs and earnings index coming out Tuesday morning as well, and we have the ECB that's also happening on Thursday, which is a pretty important event, as the ECB is going to halt their bond purchases this month, but they are still very accommodative, so we have to also keep that in mind. And actually, there's something else I want to show you in regards to the euro dollar. But let's first and foremost talk about the cable. Now, I'm not a UK politics expert by any stretch of the means. I lean on my teammates to really have more of the answers as far as the political landscape in the UK. Just like over an hour ago, from the time that I'm filming this video, the BBC had reported that the UK, despite all of the warnings not to go ahead with the vote, it looks like they are going to go ahead with the vote. And frankly, as it stands right now, it looks like it will fail in Parliament. Now, does that mean that there's going to be a hard Brexit right after that? No, but there's going to be challenges moving ahead for Prime Minister May and the UK in general. Now, one of the risks I think for the cable is that we start breaking through this. You can call it a triangle or maybe a wedge breakdown. The fact of the matter is we could let me get over to the weekly chart really quick. Oh, sorry, I went the wrong way. There's the weekly chart. So the fact of the matter is we could break down here and see lower levels, maybe 124.33, which is the 78% retracement of the post-Brexit low to the most recent highs. That would come in, right here. That is a realistic expectation if the vote fails in Parliament on Tuesday. But I don't think you write off the cable there, and we could get everybody's expecting it to fail, so you could get the sell on rumors, buy on the news type of event where the pound breaks down and then reverses after that as people start to look forward over the next couple of months, whether it's another referendum, another vote, more negotiations, whatever the case may be. As the market looks forward, we might get a bounce. I'm hesitant to be a buyer of the cable, even at support. I just need to note it for you guys and gals, so this way that 124.33, the 124 level, and obviously if you get down to 120, those are going to be really important support levels. But I think anywhere between 124 to 120, you have to start looking for some sort of support to hold. I'm not brave enough to be a buyer without seeing the price action. In other words, I'm not brave enough to just stick out an entry order and say, all right, well, if it gets to 124.33, I'm going to get long and close my eyes and hold my nose and hope for the best. That's not something that I'll be doing. Obviously, I'll be watching intraday price action come Tuesday, and as the vote takes place, and I believe it's taking place in the evening hours in the UK, so that will be during the New York session or the North American session. So you're gonna be able to, if you're just if you are here in North America, you're going to be probably watching it very carefully and just seeing what the price action is in the event that we break down. Obviously, if it passes, the cable is at risk of a huge short squeeze, and if you start looking at the pound, any move above 128.50, which is right here, that held us up all last week, that could squeeze us all the way past 130. The market is short, so you have to keep that in mind, and that's one of the other things that I take into account when looking at a possible breakdown with the pound, that I think the downside might be limited just because I know the positioning is so, or the market is so entirely short. Now, that obviously is going to have some influence on the euro. Now, before we talk about the euro, and I could go through the charts on ForexAnalytix. I did not do the weekend analysis for the basic technical analysis, which I do throughout the course of the week. I'm the one that handles most of the daily updates that you're going to see, and then I switch off with my teammates so I can enjoy the weekend, and they update the charts. And so without going through these specific charts, I'm going to actually take a little bit of time and draw them out on my own charts. But I wanted to bring up something that I thought was really important, and this is the Bund. And if you look at the, let me explain what you're looking at here. First of all, these are the 10-year Bunds, and you can see that we're pushing up against some pretty key resistance, and that's going to be not the blue line. The Bunds are the candlestick charts. We're up against trendline resistance. We've been looking for a breakout as we push through this triangle. You can see right here this week. If you've been watching or reading ForexAnalytix, you knew that we were breaking out over the last week, and we're going to stretch higher, and we pressed the 127% extension of the last move lower, and here we are challenging resistance. Pretty key. Now I'm going to get rid of that arrow because that had been there all week long on ForexAnalytix. I can get rid of it now because we are challenging, obviously, resistance. But what I'm trying to point out here is its relationship to the euro, which is the blue line chart that you see here. Now, typically, we are going to get an inverted relationship between Bunds and the euro, very similar to, if you're looking at the 10-year U.S. Treasury market, and you're looking at the dollar yen, you're going to see a very similar type of relationship. So Bunds are up against resistance, and I think this is going to tell us a lot of whether the euro is going to break out or break down. If Bunds continue to rally and we do break out above this red trend line you see here, if we break above that, that's going to be pretty bearish, the euro, at least from a correlation standpoint. Now, let me get rid of this this euro line, and let me take you over to the euro dollar. And again, I'm going to be adjusting this on the fly, so you guys are going to get to see kind of where my mind's at as far as the charts go. Now, the euro is in a triangle formation. You can see it in very clear cut. I tweeted on Friday. If you guys don't follow me on Twitter, I'm sure most of you do. I'm Pipzar, which, by the way, is a given name. Like 10 years ago, was given to me by one of my listeners of the Morning Edge years back. But so don't make fun of me. I did not choose that myself, but I've claimed it and I've ran with it. So there. Anyway, I was tweeting on Friday that we're up against triangle resistance, and be careful chasing the euro as we're heading into 114.20, which obviously stalled the market. We slipped by the end of the day below 114, and you can see how vitally important the euro is at this resistance. Okay, and then also the flip side of that is you can see how big the support level is, and I'm going to try to draw this line here around the 113 level. So from a technical standpoint, where your breakout points are: above 114.20, below 113. Okay, that's pretty simple. Now, one of I think we should also note that one of the reasons why, in my opinion, the euro will break out or break down doesn't necessarily have to do with the euro early on this week. It's going to have to do with the pound. Now, if you think about that for a moment, and you think about the UK vote that is happening on Tuesday, if it fails in Parliament, the pound is probably going to break down through support. What's bad for the UK is probably going to equate being bad for the Eurozone and for the euro price action wise. So if the pound does break down, I would assume that the euro does an about face or turns from this resistance here and pushes down through support. That would be my assumption. Now, again, if we get a false breakdown in the cable, where the cable, or let's say the cable, not necessarily a false breakdown, let's say we break lower and we hit 125 or 124 and change, and then we bounce, then you would look for similar price action in the euro, I would think. The flip side to that is if the pound breaks to the upside, this 128.50 would break to the upside, then that means that the euro is probably going to break out of this triangle and move higher. I don't think it has anything to do with the ECB early in the week. That's going to be obviously the ECB is going to accentuate probably the moves that we're already going to get Tuesday, Wednesday. All right, it's either going to halt it in its tracks or continue the push in whatever direction we're going. I'm not brave enough to tell you, and I'm not a palm reader nor my crystal ball reader or anything like that. I can't tell you which direction we're going to break out. I can tell you that the consolidation is pretty tight, and that the break from here is probably going to be fairly violent. So because of the time that we've consolidated in the market, that means, as much as that means probably zero to you right now, but it's very important going into this next week, because when we get a breakout, it's probably going to be fairly severe, and you and I as traders have been waiting for this week to come. So it is here, it's upon us. So now we have to look to take action, and it's probably going to be extremely volatile, and it's probably going to be our most volatile week of December, and probably our last volatile week of the year as far as high volatility goes. So that's why we have to be on guard, and it's important to be very aware of these important support and resistance levels that we are at going into this week. Now, if you look at the dollar index is going to give you a very similar picture, and I want to point out that the dollar index, and let me just take you over to the daily chart with the dollar index. We have to realize a couple of things. The dollar index, and let me go back to just regular drawing mode here. The dollar index stalled just ahead of the 618 retracement on a big long-term basis. Our bounces extended to the 618 and has stalled. Now, also keep in mind that relative strength, you see this is mid-range. What does that mean to us? Well, that means to us we can really break in either direction now. So if you're a bull, this is the action you want to see as a bull, because price action has consolidated and relative strength has worked off any type of even close to overbought signals we have. We're mid-range, so now we are poised to move higher or move lower. All right. Now, if you're a bear, okay, this also is comforting to you, because you're like, well, we had been divergent in relative strength. You can see how relative strength has been moving lower. Whoops, let me grab that line again. Relative strength has been moving lower as price has been moving higher. So it gives you comfort to argue that we could very easily turn lower. And I can argue both points. And that's a problem, you know, as a technician. When I can argue either direction, that means I've got to be really careful. When I'm looking at charts and I go and I say to myself, there is no doubt in my mind that the dollar is going higher or it's going lower. That's good. That doesn't mean I'm going to be right, but when I can say, you know, there's no shadow, there's no doubting that the dollar is moving higher and breaking higher, or the dollar is about ready to break lower and it's moving lower. That's great when I can feel that way. When I can argue both directions, that becomes a little bit, that just tells you how unconfident I am of where we're going from here. But I also know that this consolidation is tight enough. You can see this triangle consolidation here is tight enough that a breakout, whether we're going up or down, is probably going to be pretty good. And I think we're going to know a lot more on Tuesday. That means if you're trading Sunday night, Monday morning, you got to be a little careful, because the market's probably going to find itself fairly neutral going into these key events, going into Tuesday and Thursday. Okay, ECB, you know, obviously the Brexit vote, and then the ECB on Thursday. So now, as I've shown you the dollar index, the boons, the euro, the cable, one last thing I will talk about is the dollar yen. The dollar yen also giving us a very similar triangle pattern, very similar consolidation, and I have to say that I guess I should probably just really quick reference the S&P. The S&P closed below, or actually right on, I guess you could say, its long-term trendline support, and you can see how important this 2600 level is in the S&P. You know, we break through 2600, it's going to be ugly. You know, there's been some revelations regarding the Mueller investigation regarding Russian collusion and the Trump administration over the weekend, and it, you know, some of these this fact-finding campaign that Special Counsel Mueller's been on have shed some light on the U.S. administration, which may not be viewed favorably by the equity markets, and so we'll have to see how the equity markets reopen on Sunday. But the S&P, if it breaks down, or we start to see a breakdown, that could immediately put a, you know, damper on the U.S. dollar Japanese yen, which means the dollar yen could break lower, as the yen is used as a safe haven currency. It might catch a bid as a safe haven currency, but also the dollar may as well. So the currency pairs that could really be in trouble would be like the euro yen. Look at the tight consolidation here, and the pound yen, which, you know, looks vulnerable as well. So there are, you know, I think it's going to be a really important week as far as the markets go, and I'm going to warn you not to get too carried away chasing the markets Sunday, Monday, and really wait for Tuesday and see how the market responds to the UK vote in Parliament, because I think that's going to help drive dollar direction. Because you know, whether you like it or not, the cable makes up a big portion of the dollar index, and if the euro takes a cue from the cable, then if you put the euro and the pound together moving in the same direction, whether it's higher or whether it's lower, it's going to obviously influence the rest of the dollar index as well. But guys and gals, I just wanted to make sure that we went over those key few charts going into this next week, because it's a very important week, and if you feel that this video will be beneficial to you in the coming week, make sure you click a thumbs up button, and make sure you subscribe to our YouTube channel, so this way you don't miss any of our interviews that we do throughout the course of the week. And remember, if you're not a ForexAnalytix subscriber and you haven't tried us out already, I guess the only question I can ask you is, why not? It's only $1 for 10 days. My name is Blake Morrow. I'm with ForexAnalytix, And this has been the Week Ahead video, and I want to thank you guys and gals for listening in. I hope you enjoy the rest of your weekend, and I'll see you on the FACE webinar tomorrow morning.